G'day everyone, welcome back to Pete's Investing. Today is April 10, 2023. This is the US crude oil price update. On the daily chart, you can see here the price is still declining, and it's in alignment with this CCI 1500 moving average 400. Whereas on the 4-hour and the hourly time frames, it's an upswing, and I'll drill down to each of these charts in more detail. So again, on the daily first, I've got this key support and this key resistance area, and it's currently been in that range for a number of months, and it's currently just sort of hanging in there below this resistance area at the moment on those last few days. So just be mindful, it may just bounce to the downside, or if it breaks to the upside, we're going to see more bullish movement, which will be a positive in alignment with the 4-hour and the hourly time frames. It's already broken above this descending trend line, which was drawn some time ago, so that's a positive. I'm not going to draw any other descending diagonal lines yet until we get more clarity in terms of what this price action is doing. So in other words, if it breaks to the downside, that may be another area of a trend line forming. On the 4-hour time frame, again, you can see there it's in an upswing on the CCI, and that's just currently consolidating below that resistance area. And I've also drawn this Fibonacci retracement. So anything that you can see that was basically would have been an ideal opportunity to go long once it broke to the upside on the hourly time frame, and I'll go to that in a minute. But anything above the 61% level would have been ideal to potentially take positions in especially if it's broken above the moving average on the CCI there. On the hourly chart, again, I'll get rid of that for the moment. You can see there, as soon as it broke above the moving average of the CCI, and I'll just draw back to the summary, that would have been an ideal area to go long, because that was in alignment with the moving average being broken on the 4-hour time frame as well, on that timeline there. So that would have been an ideal area to go long on the hourly, and based on the 4-hour time frame, although just be mindful, we're still in a pretty strong downtrend on the daily. In summary, you can trade the hourly based on the 4-hourly, but don't trade it based on the daily. Don't trade the 4-hourly based on the daily. In other words, I wouldn't be going long on the 4-hourly at this point. So again, drilling down to the 1-hour time frame, going long there would have been ideal, especially when it broke above the 61% level there. And I've also got another little Fibonacci retracement here, and you can see there the key point would be below this descending trend line, but then again we've got this 61% retracement level if it breaks to the downside. Alternatively, if it breaks to the upside, it'd probably be a good opportunity to take some long positions, because that'll be a new area breaking to the upside on all timelines. And that's also going to give us more positive movement on the daily as well as the 4-hourly as well. But at the moment, that consolidation is showing potential weakness, especially if the CCI keeps breaking to the downside in closer to to its moving average. So again, to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like us on Patreon, and see you in a future video.